Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 16th of January, 2022, and we're going to be talking today about, well, whatever. I do actually record these intros before we start, so I've actually got no idea exactly what we're going to talk about, but typically crypto, blockchain, DeFi, NFTs, ICOs, STOs, any other three-letter combination, really. If you find the session of interest, then do come along and join in a future one. We run this every Sunday evening, 7 p.m. UK GMT. If you don't get a chance to join in, do click on the subscribe button on YouTube, do click on the like, make comments. So let's see who's going to come and join us today.
Hello, Gary.
Hello, Mr. Ripple. How's it going?
XRP, not Ripple.
Good point.
Very well, thanks. How are you? So it's good to see you. I mean, the last time we had a chat was, I think it was Christmas Eve.
Was that on Twitter by any chance?
No, that was on Facebook for CryptoGB.
Ah, yeah. Okay. So there are so many channels and mediums and groups and all this kind of thing. It's so difficult to keep up with who's doing what and what's being said and all this kind of thing. It's where I think there'd be value in having a social media aggregator that brings all these channels together. So like the YouTube channels, the podcasts, Twitter, Facebook Lives, as you say, and just play it all through the one kind of thing. So, I mean, I use Stream Deck sometimes to broadcast out to multiple channels, but you almost need the opposite to bring all the channels back in again, like an RSS aggregator type thing, but for social media. So.
Or hire yourself an intern to do it all for you
yeah,
on your website. Maybe that could work.
That'd be a good one. So what's going on in your world? Anything exciting?
Yeah, it's been manic. So the last few weeks, but we're gearing up for launching Noah to friends and family at the end of the month. And that'll be a very controlled kind of mainnet testing of the Noah app. On schedule, but everyone's working around the clock. It's been pretty brutal. New website should be available next week, and I'm really excited about that because it looks completely different and it's a lot better. And then hopefully, I'm just getting into DeFi quite heavily at the moment. I'm learning a lot about that very quickly, staking some of my own assets in it and getting burned the cost of learning, I guess. But yeah, all full steam ahead, and the group itself, CryptoGB, is just moderating that. We've added a few new moderators. The group continues to grow, so it feels exciting. I think 2022 for crypto is going to be very interesting. So
it's going to be the year, isn't it? Hey, and we've got Fernando's come and join us as well. Hey, Fernando.
Hey. I'm going to make a tea. I'll be back.
No problem. Yeah, you're doing a fantastic job, Hoos, on the Facebook group with CryptoGB. That's gone from strength to strength. And in fact, I think I've just applied for my first expert badge on it.
Yes, I invited you. I thought, why haven't we done this earlier? I'm actually spending some time looking at how we can make the group better. We've got new moderators, and the group wouldn't be what it is without them. Honestly, we're getting hundreds of moderation requests every day, like stopping spammers and the Telegram groups and the promotions. And some of the mods that have joined us now are a little bit more attuned to the features that are available on Facebook for automating the quality gates, which has massively helped as we grow. And yeah, it's like I just realized that we can invite people to be experts, and well, why haven't I done this earlier? So you are the first expert.
Excellent.
Welcome.
Well, brilliant. Well, I'll definitely wear that as a badge of honor. But it's amazing that all the platforms keep adding these features and everything. I run a number of groups on Telegram, for example. And Telegram keeps rolling out new and interesting things that I didn't know I could do, type thing. And I moderate a few Facebook groups on totally different topics away from the crypto space. And again, I keep getting alerts from Facebook to say we've now introduced this thing, which effectively means you've got no control whatsoever over who people come onto your site and that kind of thing. It's like I don't remember asking for that.
Yeah, they're all about just shoveling people into the groups, right? Increasing adoption, irrespective of the quality or appropriateness of the individuals.
It's a real shame because I've seen this happen a few years ago with LinkedIn. LinkedIn used to have a brilliant group feature, which was great for networking, great for starting dialogue, conversation, that kind of thing. And then they did something to it that just trashed it, in effect. And it lost all the quality, because LinkedIn used to be a really good source of peer group discussion, where you could have high quality members of the group discussing sensible stuff. And then they made some change and it just went downhill. And I fear Facebook, as you say, that they've just switched their model away from moderated, walled garden, controlled access to groups to anyone can come in until they do bad, kind of thing. So I guess it's based on what describes the US trust model, because I've seen it in the past that if you think about in the UK, traditionally, culturally, we don't trust people until they've earned our trust. Whereas in America, you automatically get the trust until you lose it, kind of thing. And I think Facebook's gone in for that, for their groups. So we'll see where it goes. I think we need somewhere in between, really, where people are given some trust and they can earn more or lose it type thing. So we'll see.
Yeah, 100%. I wonder how much of this is Facebook panicking as well about other platforms, because as you say, like we're using Discord as well now and Telegram, and my God, the features available on Discord. I mean, I've been on Discord for a long time. I've just as a passive user of it, not as a kind of anyone that runs a group or administrates a group. But yeah, everything in crypto seems to be conducted on Discord or Telegram. Yeah. And the growth hacking capabilities on those platforms is something to behold.
And that's the thing, is that I kind of, I stay away from Discord because it's not that non-techie friendly. You know, it's great if you're into, techie stuff, it's fine. And if you're comfortable with all the other messaging platforms now, and that's why I kind of like Telegram, because I describe Telegram as being basically like WhatsApp, but it's just that you've got a blue background instead of a green one. It can be as simple as that. So it's really easy to send messages and join that kind of thing. Whereas Discord, I find myself getting lost in I've got voice chats here and message chats here, and I've got this group here and this server here. If you're a geek, yep, fine. So anyway, it is just the way it is. And this is again where it'd be great if there was a content aggregator that pulled in WhatsApp, Discord, Twitter, Facebook, all of the feeds and put it into a nice, easy platform. I know I used to use, TweetDeck. TweetDeck was a content aggregator for Twitter feeds, and it was extending things to have other things. You kind of need the same thing with like an RSS feeder or something. So anyway, hey, see, we've got iPhone's joined us. iPhone, is that Mark? Keep forgetting.
That's Mike.
Mike, I got letter M right. That's a start. Hey, Mike, good to hear you again. Welcome aboard. I don't know if Fernando's come back from making his cup of tea yet. You there, Fernando? No, his kettle mustn't have boiled yet. Because I'm going to quiz him shortly, Hoos, because I know you follow quite closely the Ripple court case and take an interest in, as you say, in XRP. I happen to know Fernando might have different views. So,
I'm back.
Hey,
right on time when you're talking about XRP.
There you go. It's like, was it Beetlejuice? There, if you say the name 3 times, he magically appears. If you say XRP 3 times, Fernando appears.
Yeah.
So yeah,
you know my view about it. So
yeah.
Let's not waste time on that.
So maybe we've got our resident experts on legal cases and that, because I know Hoos has been following it with some interest over time, and there's been some developments the last few days, hasn't there? So some news?
Yeah, there's been a delay but both sides requested it for one of the phases of this, which is getting the expert discovery over. So both sides agreed to extend it until, I can't remember precisely, but it's another odd kind of 40 days or something.
40?
Yeah, I think it was 40 days.
It was supposed to be tomorrow, isn't it? 17th?
It was, 14th and then 17th for the announcement.
Yeah.
But yeah, I think it's gone. I can't remember precisely. A little bit embarrassing because I'm supposed to be watching it. But both sides requested it. So I don't think it's particularly controversial, and it was mostly down to having the experts in person and the difficulties of doing that because of the travel restrictions from the COOF. So let's see what happens there. I think what's really interesting is the amount that's being unearthed on the conduct of the SEC chairman, the previous one, Jay Clayton, and Henman as well. There's a lot more being uncovered about these guys and how they've been, let's just say, picking winners and losers in the crypto sector. I think the pressure is, or the temperature is being turned up on them quite considerably, from what I can gather at the moment. So, I mean, it's slow progress. No one's anticipating. Well, I think Jeremy Hogan put it, one of the kind of YouTuber lawyers that's been following this case, stuck his neck out and said maybe August, September is the earliest that we'll see a kind of verdict on this, unless a settlement happens earlier, which, unsurprising, drags on. These things do. It's US courts. But I think what I'm really interested in is the heat turning up on Ethereum and the foundation, not the token. I'm completely ambivalent about the token and the smart contracts. I think if they solve the gas fees, all power to them. But I think the conduct of the foundation is certainly questionable. So that's the interesting part for me.
So do you think the SEC is going to revisit its early decision around that in some way?
It never made a decision around it, and that's what the court recognizes. These comments that Henman made were his personal opinions. They were never a reflection of the SEC's actual position. So actually, no crypto has clarity, apart from possibly Bitcoin, because it's really difficult under the current context in which clarity has been assumed by the Ethereum Foundation. Bitcoin probably sits outside of that, which is good. But Ethereum certainly doesn't. These were Henman's own personal opinions that he was espousing in video evidence that's been collated by the XRP army. So there is no regulatory clarity for Ethereum, and anyone that assumes there is kind of, I'd say, that's a stretch of an assumption.
Because I thought around about 2018, the whole thing about the Ethereum ICO originally was brought into question. And I thought I'd seen something published from the SEC to say that effectively they recognized that it kind of was an ICO, but were choosing not to prosecute on it. So it seemed that they defined it and they'd reached a decision. So it was almost like getting a no action letter without actually being requested a no action letter.
Free pass, as it's infamously being referred to. I'm not aware of that. I can certainly have a look. I think what I've seen is references to the speech that Henman made being used as guidance. So the speech itself says, this is my personal opinion, I'm not representing the SEC, but then later on the SEC published on their own website that guidance can be found by referring to the speech that Henman made.
Okay.
Yeah, precisely, right?
But one thing is about the way he conducted himself, yeah, and another thing is what the law is, yeah, or what are the regulations. So just because one of the members or a couple of the members behaving as, that's an internal thing for the SEC to resolve. What's the behavior, how people behave, what they should say, what they should not say, in personal capacity or not, doesn't matter. Those are internal things, yeah? Another thing is actually what the laws and the regulations say. And I don't think the XRP will ever be able to pass, a lot of these things. So
well, but hold on.
That's my view anyway.
Yeah, so the laws are not clear. That's what's being contested. That's precisely what's being contested at the moment. And XRP is an asset, by the way. It's like saying that oranges are a security. That's not the case. The case is that Ripple and the chairman and the CEO made contracts to sell XRP, and that is the violation of the security law. It's not the underlying token at all.
Yes, well, yeah, let's stick to that. Yeah, SAFTs are illegal in the US. Full stop, you know, SAFTs are illegal. So they did that, and they were selling tokens, which are securities. Yeah. Second, XRP never had mining. They created 100 billion tokens, and they start to sell it, which is very different even from Doge. Doge, there is mining. You get rewarded. The mining creates those tokens, yeah?
Hold on, XRP was created before Ripple ever existed. So this is, you've got to remember this. Yes, and there's no mining, and that was a decision made by the founders of the XRPL. So I don't think there's anything controversial there. They were very open with how they distribute the asset, placing it into escrow, giving 60% of it to the Ripple Foundation to grow the decentralization of the network. So again, I think that a lot of what's coming out here, the law is very specific in terms of the case that's been raised. It's against Ripple and the chairman and the CEO, but it includes XRP as a security. And I think that's their downfall, because clearly XRP has utility. And, you know, I didn't buy XRP knowing about Brad Darlinghouse. Like the vast majority of people, we bought it in the secondary market on an exchange. They didn't sell it to me. I purchased it as a token on a free exchange. And by the way, the rest of the planet agrees with that definition. It's only the SEC, Jay Clayton and Henman, who had nefarious meetings, I would say, with the Ethereum Foundation, who have decided on their own accord to declare it as a security and take them to court, declare the asset as a security, which is, I think, again, their downfall here. So yeah, the law is not clear. This is why we're in the mess that we're in. And this is why there's a writ of mandamus raised by John Deaton for 65,000 and growing XRP holders globally against the one regulatory entity in the world that seems to think a digital asset on a decentralized exchange is a security.
So does that mean effectively they're trying to raise a global class action in some way against the regulator?
That's the next phase. Yes, exactly what's happening. So I've already signed up to the court case. My name's on there as part of Johnny Deaton's writ of mandamus. And I think they're going to level up on the international participation on this one. And this is looking like fraud and misconduct on behalf of Jay Clayton, Henman, and the Ethereum, one or more people in the Ethereum Foundation. Now, don't get me wrong, I hold Ethereum. I don't want to see Ethereum collapse, but I do want to see justice happen. And I think this is such a clear black and white case of it that we have to wait for the US courts to do what they do, and it's going to take as long as it takes. But to kind of tar XRP as somehow being different to other digital assets, it's a little bit odd to me.
It's going to be interesting. It's, as you say, you kind of need the case to go through to determine or to make a determination in some way. And you're right that until we've got that, you don't really know anything with any clarity. So it's as often the case with these things, it's the first case or the test case that kind of proves the way for the rest. And it's always very painful.
It's the most exciting thing, I think, that's happening, at least from a legal perspective, in the crypto sector, certainly for the US, but let's face it, the US is quite influential. But this is hanging like a sword of Damocles on everyone's head in this sector. So we had Cardano, for example, recently. eToro delisted them, which is a little bit odd. But this, if anyone thinks that any asset beyond, let's say, Bitcoin is free of the SEC, given Gensler's stance on this situation, he seems to be very negative on the entire crypto sector. Gensler being the current chair of the SEC, he's made some pretty awful noises about regulating the crypto sector, and I just don't think any crypto asset is free of this.
Well, this is where it's been interesting how a number of exchanges delisted XRP when obviously they realized there was a risk of court action showing it was a security, which means that they, by implication, were trading in a security and they weren't licensed to do that in many jurisdictions. So yeah, it's going to be interesting to see where it goes. Hey, Fernando, I decided to let you back in again.
Yeah, I missed a little bit your talk. I got disconnected, but look, SEC is not going after Ripple, yeah? It's going after XRP, yeah? And XRP has existed before Ripple. True, I mean, we know that, yeah? So they are actually going because what they are saying is XRP will never classify as a cryptocurrency, like, you know, they accept it. It's not fully validated, you know, that Bitcoin and Ethereum, etc., were more classified as cryptocurrencies. But the point is that it's all about passing the Howey test or not, yeah? That, in essence, that's what's going to be, in my opinion.
Well, is that going to be the other thing, that this might be an opportunity for them to revisit that particular set of standards and bring it into the 21st century, perhaps?
Maybe. Who knows, you know? Nobody knows what's happening there. I was watching a video recently about a professor of economy that's saying that the US, you know, debt is 153 trillion, yeah? And I was astonished, and everything he said, it makes sense. So the US is in a lot of trouble when it comes to anything related to financial, you know? We seem to go to a different planet from what we really live in. So who knows, you know? It's all about what is going to make sense to protect the US dollar. And that's what's going to be the end game for validating cryptocurrencies like XRP and non-XRP.
Well, at least for the US, I think what's more at stake is if the US doesn't play ball, other countries are going to win. And I think this is why it's gone to Congress, right? This is as big as the internet. Now, the US had the foresight to allow internet regulation to the extent to allow commercial entities in the US to participate. If it doesn't do that, it gets left behind. The only country that will suffer from this in the long run is the US. The rest of the planet isn't going to wait. And let's face it, kind of US hegemony has been kind of on the back foot for quite a long time. The US it's important for people in the US. It's not so important for the rest of the world as it was 20 years ago, let's say. So again, I just don't think it's up to the people in the US going to Congress and making laws to decide for themselves if they want to participate in what will be, in my opinion, you know, the next incarnation of innovation for the internet and internet-based technologies. If they don't do that, the technology isn't going to wait for that. It really isn't, including XRP or anything else deemed to be a security by the US.
And I think the other thing is going to be as well that by the time they finally get their heads around it, we'll have something else which has come up anyway. And, you know, it's always known that regulation is always trying to play catch up with what's going on with technology anyway. But they do need to kind of nail this down, as you say, because it could actually either threaten the country's economy in some way if it grows, or could stifle the opportunity. Because you only need to look at what's going on around the world and how crypto friendly, you know, jurisdictions, Malta, Gibraltar, you've got things like El Salvador making Bitcoin legal tender. You've got machinations of other countries now beginning to consider adopting crypto, this kind of thing. So there is the risk that by regulating, you're actually not protecting the consumer. You're actually suffocating innovation within your own thing. So see where it goes.
There's a balance. We need to be careful with this, yeah? Because if you think, well, what stable coins are, yeah, is taking really the role of a central bank. So you can print as much as you want, yeah? And if it's not really proper regulated, we need to have really, really strong regulations of stable coins, okay? Because I can come, yeah, and, you know, ask for $1 billion, $2, $3 billion, yeah, in USDT printed, and just go and pump up Bitcoin and get everybody to come in, make it happen to 50, 60K, and then I'm the first one to dump. Yeah, and I keep skinning people. Yeah, I mean, just by creating volatility in the crypto market, you can destabilize smaller economies like El Salvador or whatever, you know? I think it's a big mistake for these countries to get in at this stage. It's the worst thing that they could ever done, in my opinion. That's my personal opinion, because there's no regulation in stable coins. So anybody within half, don't forget, there was already 17 million Bitcoins minted by end of 2017. Yeah.
Well, this is maybe the thing I was trying to say before, that with XRP, that is paving the way to provide the legislation around certain definitions of securities and crypto assets as well. Because that's interesting. There's a piece of work that's just been going on in the UK with the Law Society about strengthening the definition and clarity of crypto assets and smart contracts, and are smart contracts legally enforceable now. But they need to get legislation and regulations in place to then look after the next wave. And I agree, I think CBDCs could well be the next wave. You look at PayPal, there was talk about them launching a US dollar-backed stablecoin on the 11th of January, I think it was. Facebook, well, it's no longer Facebook, with DM. DM was talking about launching a stable coin for global payments and everything. So you're right that the regulators need to get their heads around stable coins, which are different to crypto assets, which are different to securities, which are different to cryptocurrencies. And I think that the poor regulators their heads must be spinning right now of, what do we try and regulate now? What poses the greatest threat to either financial stability or consumer safety in some way?
And this is too big for any regulator. And this is why I think, we've got Minnesota Congressman Emma, is it Michael Emma? Tom Emma. Yeah, kind of arguing that stable coins, private stable coins, shouldn't be over-regulated. This is not a question for regulators. Regulators don't create law. They execute the functions of the law. They don't create it. This is where you get, regulation by enforcement is essentially creating law. It's completely running amok. So this has to be, unfortunately, yes, for us, unfortunately, this has to be decided by the lawmakers, not regulators.
Well, that's where you've got an even further slower movement, because putting in place regulation tends to be quite slow. Putting in place legislation is even slower. And that means you're moving on from a group of regulators to make decisions to a group of lawmakers to make decisions, and they're usually politicians. Because certainly, like in the UK, the way that statute law is created, it's created by Parliament. It's created by the MPs and the ministers and governments and that kind of thing. That operates even slower than regulators. So we may have this multiple thing that, at least in the US, as you say, that they've got, as well as the regulator, they've also got the Senate and this kind of thing involved. So at least they're trying to accelerate that. Yeah.
Interesting times, right?
Yeah.
And I think it's by design that lawmaking has to be slow. It's fast lawmaking, Chinese style, from a centralized entity can be quite painful. I think it's probably more, the laws that we have and traditions that we've built up over a very long period of time are there for good reason. You don't want to overturn them quickly. So, it just creates a gray area. And actually, that's where risk makers, risk takers, entrepreneurs and innovators fill the void. Now, some of those will succeed, some of them won't, and I much prefer a degree of market forces making those decisions, and then finally being arbitrated by lawmakers. And once we reach a level of understanding of where we are on these technologies and their application in society and the implications that they have on a societal basis.
I think, was it George Bernard Shaw who came up with some sort of quote around, in order to enable change, you need people to be unreasonable. And therefore, change and innovation only comes from unreasonable people doing unreasonable things, which is kind of interesting, because that means you are pushing the boundaries against whatever the de facto or standard is at a time. And it's only by pushing these boundaries and then getting those new boundaries accepted that we do innovate and we change things. So, yeah, I agree. I think 2022 is going to be a very interesting year for crypto. I've said for some time that I thought that this year was probably going to be the year of regulation, which was not necessarily a bad thing, because once we're operating in a more regulated market, as long as it's appropriate regulation, by which I mean, not over onerous, but sufficient. Once you're operating in a world where crypto assets are now regulated financial instruments, that then allows the big players to move in. So crypto, what's the market cap now? 2 trillion or something? Compared to the financial markets, that's still peanuts. But once the pension funds, hedge funds, banks now can move into something that is regulated, that opens the floodgates. And I think we're just at the beginning of a very big thing. Yeah, I will caveat that with, this is not financial or legal taxation advice as usual.
Yeah, I agree with you, actually. And but problem is, without having a framework, without having regulation in place, all of those people are scared to join, anything related to crypto. And I think the most scary thing is, I have no doubt, if you do a proper analysis, you will find that there's a lot of borrowing from Ahav and from other places when crypto is pumping. So what these guys are doing is they give their crypto as collateral, they get some USDT, yeah, and they're gonna buy more Bitcoin or Ethereum or Solana, whatever they want to pump, yeah, and that pushes the price up. At some point, they need to pay back. They need to pay back. They need to pay back so that they can get their collateral back. Yeah? Mm-hmm. If they don't, that costs interest. So when they do that, you've seen it since last year. We've been there 3 times. This is the 3rd time that we came down, right? Well, 2nd time. So I think regulation on stable coins on exchanges is absolutely essential. SEX. Because otherwise, this is not going to end. It's going to continue, and we will never, in crypto, we will never have all of those funds, all of those. It will still continue to be a small thing. I think it's about not even 1% of the total markets, which is ridiculous. Yeah.
And I think that's maybe something that, as much as we're all crypto advocates, we do need to keep in mind proportionality of. Even though the crypto space is growing rapidly, you're seeing innovation. So things like DeFi and NFTs and where ICOs now, but it still represents a tiny amount of business compared to the mainstream.
So NFTs is an interesting one.
Yeah, it's a whole area in itself, because the more I listen to people talking about NFTs, the more I realize just how little they understand them.
Yeah, pretty much. And they don't understand what a lot of people don't understand, and they jumped in and buying NFTs, is they don't understand that art in general, and collectibles is a very illiquid market. Mm-hmm. Yeah? So you buy it, but then to sell it, you're gonna struggle, unless if you buy one of those CryptoPunks that if you put it for sale, somebody will come and buy it for sure, It doesn't matter, 3, 4, 5 million, there's going to be someone who's going to buy it. Yeah. There's so much money that was spent in people buying NFTs because they buy it at $1, $10, $100, and they think they're going to make $1 million, There's billions that was spent, and people are never going to see their money back because nobody's going to buy that back from them,
But a lot of people don't actually, again, they don't understand technology. They don't necessarily understand what it is they've bought, but that doesn't stop them if they think it's going to go up in price. But they also sometimes don't even understand the underlying market. So the art world, I've had some exposure to it over the last 12 months because I've been helping run some NFT projects in there. And it's fascinating that ultimately a lot of high value, real world fine art is all about bragging rights. And that's all it is. It's remarkable that, ultimately the reason that Beeple's $69 million, 5,000 days of wherever it was sold for what it did, it's nothing to do with its intrinsic value. It's just someone is able to say, that's mine. It's on my mind.
I've got to jump in. I've got to jump in on that. So I certainly agree with Fernando, actually, on a lot of this, and you, Gary, as well. But I think, I'm an Austrian economist, so all value is subjective. I look at art, so nothing has intrinsic value, as far as I'm concerned. It's entirely subjective, marginal theory. Yep. As far as I'm concerned, art is private money. So bragging rights translates, and going to what Fernando was saying, the market structure as well. The traditional art market is a way of storing value in a very closed private group. It's a private money. It's not a public money. And it's very generational. So when a generation dies, you find that the art that was extremely valuable for one generation to the next becomes worthless, or 1/10 of the value that it was being traded for previously by the generation that actually held it. The next generation doesn't value it because they create their own private money in the form of their own private art. I think the big difference here with NFTs is the market is more liquid. So I agree with Fernando that the art market is, especially the higher end art market, is the most illiquid. It's there for a purpose. It's very tax efficient. It's liquid for the members of that private club and very illiquid to everyone else. And I think that there's the value is entirely subjective within that club. What's happening is that market is being disrupted by technology. And that's the exciting thing here. And I think that the opportunity lies in these marketplaces being opened out, like OpenSea or whatever else that's available now. And basically, we're seeing, I think NFTs are the birth of private money for the masses. What's been held by the elites up until very recently, I would say as far as 1990s, even the noughties, the art market, this asset class, which is private money, was the reserve of the elite, is now opening up to the masses. And if you view it that way, the opportunity is astounding in many ways, because you need to understand what money is: public versus private versus state-run versus institutional forms of money. And I think Hayek postulated the ultimate form or expression of money is at an individual basis. So I'm my own currency, and I trade my value on a free market of other individuals within society who deem what I'm worth. It's quite a powerful idea, one that I'm not expressing very well at all, as I never do with any good ideas. But I think that's what excites me about the NFTs. And it's taken me a while. It's taken me a while to get to that position.
Well, that's kind of interesting then, because what you're describing is almost a replay. And I see this a lot in technology, where we keep doing the same thing with slightly different words or whatever. It's almost a replay of the ICO craze of 2017, 2018, where the big selling point about ICOs was it provided access to small investors, the opportunity to invest in high growth potential projects, and it allowed the high growth potential projects to access the small scale investors. So it's almost, we'd need to change a few words here and there, but you're almost describing NFTs as being, they allow people to blah, 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 blah. It's almost a repeat of the ICO.
Yeah, I am someone who has, and I speak at conferences a lot about this, and most people know I've been into NFTs for quite some years, but I continue to try to educate people in a few things. NFTs is art and collectibles. nothing else. There's people bastardizing what NFTs should be. Okay.
Okay.
Let me finish.
No, I disagree.
Let me finish, because what many people are doing, this is how it started. Yeah. So just because there is a token, yeah, and is a non-fungible token, it doesn't mean that you can call that an NFT. So NFT started, the actual term NFT started with the technology side, and then it was very rapidly adopted in 2016-17 by the people. And Atomic Hub, when they I think Atomic Hub started in 2014 or 15, if I'm not mistaken. Yeah, it was just collectibles. Yeah, it was just the cards, collectible cards. Yeah, and it evolved to also people start to post their digital art online. Yeah, so it's digital art, and art comes in different ways. It can be an image, it can be video, or it can be sound, music. Music is art. Yeah, so there is a representation of a digital file that is visual representing or audio representing something. Yeah, which it is art and collectibles, nothing else. What people trying to do with NFTs is what you can do with any blockchain out there. You can have a token in any blockchain that represents something, like certificates. We have, and we know this for a while. Yes, Gary. How many projects have we seen since 2016 that are doing the traceability and the bags and whatever the products? You can attach certificates of anything, or tokenizing a house. I mean, that exists. Proper tokenization exists for quite a while, and any blockchain can do that. What people are trying to do is to bank on the word NFT and try to make money out of it. So my opinion is very simple. It's been for a while: art and collectibles.
So I'm going to extend on that. I'm going to say, first of all, I think NFTs actually allow us to deliver on the promise that blockchain was launched originally. So the whole thing about provenance and that, exactly as you say, what NFTs allow you to do is they actually automate and encapsulate a whole load of that provenance and traceability from the get-go. So I actually think, things like traceability and provenance, NFTs will allow us to do that. The other one, and again, it's
but it is not a problem. That problem was already solved with any blockchain.
Well, that's the same argument I heard.
No, I think I do agree with Gary on the traceability. You think about GameFi, right? Lots of players, they cheated on the market to sell something, but then they kind of clone another item. You have NFT, however, you cannot just clone the item like that, because the NFT would say that's not a valid item. So I think that kind of solves some of the problem on that part.
Yeah, but traceability exists on blockchain.
Okay.
For quite some time. So for example, I'm just going to give you a quick example. Yeah, Walmart implemented a full traceability with IBM in 2017 for products to display. I mean, there's not a problem. His problem has been solved.
Okay. So I heard those exact same words in the mid 2010s when people started asking me to describe what a blockchain was. And all the database, all the DBAs, and I was an Oracle DBA, were saying, you can do all of that with a database already. You want decentralization? We can give you decentralization. You want distributed systems? You want programmability? You want to throw in... So you're right, Fernando, there. NFTs don't truly enable anything new. They just encapsulate an ability to do something off the shelf in much the same way as a blockchain allows you to have a distributed, decentralized, programmable, cryptographically secure platform. You can do all of that with a SQL Server database if you really want to.
No. Okay, that I agree with you, but that's not what we're talking about here, because a blockchain gives exactly the same. Tell me what an NFT gives that a blockchain doesn't give. It gives you a token. It's that token, and that uniqueness can allow you to do traceability, transparency on chain.
All it is, all I view it as, is it's almost like a program library that someone has written that it saves you writing it from scratch yourself. You just pull it down, write ERC20, ERC721, ERC1155 or whatever. You got all these standards and it's just encapsulated. The other thing I think you're missing out on what you're saying about digital art and collectibles is I can see two other massive areas that are growing rapidly at the moment. One is around, and it's kind of a variation of collectibles. It's kind of like the loyalty type schemes for clubs. So a lot of sports clubs are getting into this space about having like loyalty type things. So NFT top shots in the States with the basketball is probably one example. So I think that's a massive growth area. The other one is, and this is the geek word time, is about the whole metaverse and the whole ability to have NFTs that track ownership of non-physical assets in a virtual world and pull them across various worlds. Still trying to get your head around that is still mind-blowing, I think.
It's a collectible. So that's exactly what I'm saying. It's a card on a game, and I have a few. Okay, I play a few games, you know, because I love that type of thing. When I have time, I'm playing now. I play only for about 1 or 2 days, and then I have the tokens and I keep them, you know. But what it does is, you know, you have these cards that are collectibles that give you something on a game. Yeah, it gives you more than what you have than you just play the game normally. Yeah, and what that card will give, it's because it's on a blockchain. Yeah, it is, if it is a unique card, it means there's one of one. Yeah, then of course you get more powers, you get more this, you get more that. If it's one of the series of 10, then you have so on. And this is how people are implementing them in games. Of course, because it is on a blockchain, has traceability. Yeah, the cool thing is it is an NFT. That's the cool thing, because it's a card and it's collectible, and other players want to own it as well. Yeah, even if you don't play, you just want to own it because it gives you something that nobody has.
But again, extend that into what we've seen already in the blockchain world, where I think I've seen over 60 projects now that have been trying to put real estate onto the blockchain. You know, and it's quite entertaining when someone comes along and says, "I've had this great idea. I'm going to put property on the blockchain," and you go, "Okay."
I've heard of it a few times. Yeah, I think this one time I met this guy from like the BTOE. He's like a real estate investor. He's trying to do something like doing some real estate and NFT kind of connected part thing. So allowing people to kind of sell the real estate and review it online, and then kind of like investment like that. Make it a lot more liquid as well, particularly because, you know, real estate investments are usually not that liquid, but you have like an NFT or crypto that would present the ownership of the real estate and make it a lot much easier to buy and sell real estate.
Yeah. And I think that's what I'm finding interesting. I mean, it got to the point where I met up with a law firm a while ago, and they said, "Can you just take a quick look at this organization structure?" And they didn't tell me what the project was, and it was just the entities of what they were, and it had a special purpose vehicle in the British Virgin Islands and a holding company here or whatever. And they said, "Yeah, what do you think about that?" I said, "Oh, you're going into crypto real estate then, are you?" And they said, "Sorry, how did you know that?" I said, "Because I've seen this structure so many times." So that's in the physical world of linking in a blockchain, that kind of thing, because there's so many problems with that as to why it doesn't work. But a lot of those problems are to do with regulation. You know, in the UK, in the UK, you have a limit as to how many people can have a beneficial interest in a physical property. There's a limit on that. But if it's suddenly a metaverse property, there's no law about that. There's no
virtual, because what you're buying is not actually property. It's an NFT, that represents something on a digital map that somebody created. Doesn't give you ownership in the real world. So this is what I'm trying to tell you, is that these are all NFTs and these are collectibles, because once you start to associate the term NFT with traceability in supply chains, there's plenty out there: Crystal Chain, AMA Chains, Peer Ledger, you name it. There's so many of them. Look, I actually invested in a few of those, when it was the ICOs, and they exist. They are out there, and they're doing a great job. So people are picking up on those. And trying to use the term NFT. All of these are people banking just now to try to get in and make some more money. The same with the properties. I totally agree with you. I've seen people saying, "Yeah, NFT my house." I say, why? Do you know why? It's not an NFT. I keep telling people you can tokenize your house without creating an. What are you going to do? Take a photo outside? This is my house. You get that on state agent sites.
So you're probably hitting on the thing again, that, and again, I've seen this happen so many times where you go around in circles on it, that all we're seeing is that people are repurposing either technology or names. So, you know, the whole thing about, oh yeah, well, this is a blockchain, now, and a blockchain's a unique, it's blah, 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 blah. I remember having the conversation with Corda several years ago, and it was quite a funny event where I actually took a photo of one of their slides where Richard Kendall Brown, I think it was, actually openly said, and he wasn't concerned about it, you know, okay, so Corda is not a blockchain, right? You know, just be clear on that. And you know, everyone knew that. It was no surprise whatsoever. But I happened to tweet that. It went viral. You know, and it's the whole thing that Corda is probably one of the most successful commercial non-blockchain blockchains there are. But they've stuck with it. I think they call it blockchain inspired these days.
Isn't it a digital ledger technology rather than a blockchain?
No, because it's not even that. I once described it as a $50 million messaging application, because that's ultimately what it is. It's sharing and sending messages. It's just the way it validates them there.
Right,
yeah, I mean,
distributed ledger, sorry.
Yeah. I mean, look, you're right, you know, like there's so many things that people have been building over the last years, you know, since ICOs. I mean, even IoT-based traceability with sensors, you know, all, you know, really end stuff, you know, right at the edge, you know, are sending all these data points, you know, all these signals back to a blockchain, and it's fully traceable with unique tokens, you know. Every token in a blockchain is unique. That's what I'm keep telling and trying to educate people, you know, go back and see what an NFT, how it was created, what is it for, yeah? And forget just it is a token, you know, because it is the term NFT that represents a digital file, yeah? That is unique as well. So that's why I'm also a big critic of people create series, because if you create series 1 to 100 and they all look the same, yeah, and they have the same price point, it's the same thing as you have a $10 note with a different serial number. So it is fungible. It becomes fungible because it has the same price at the point of sale, and it looks exactly the same. You know?
But this is where you start getting into things like limited edition prints, where there's, you know, a numbered set of prints and there was only 100 of them ever created. So they are technically interchangeable. But do you think that of that series of 100 prints, do you think the one which was serial number 1 might just carry a little bit more value than the rest?
Yeah, of course, but that's the value that people are supposed to give it to it, you know, because they look exactly the same. It goes back to, but that's not what I'm trying to say. What I'm trying to say is if you are going to try to sell a digital asset, yeah, it has a series of 1 to 100. They look the same. Yeah? As the same at the point of sale as the same price. Yeah, go and see what fungibility means.
Yeah,
and it's the whole discussion about fungibility versus non-fungibility. Non-fungibility means 1 of 1, unique. Yeah, something is non-fungible. Once you have 1 of 10, yeah, or I have 100 that look the same, is not unique anymore.
It does come down to how you treat it and how you use it. It's like you say a $10 bill. No, a $10 bill is completely interchangeable with any other $10 bill, unless it's a $10 bill where the serial number is 1000.
Gary's saying, like, for example, it's not sometimes like fungibility is just only yes or no. It could be like 50% fungible or something like that. It's like something in the middle of it.
Yeah. It's a bit like, Fernando, do you think all Bitcoins are equal?
No.
And this is the funny thing, that everyone always argues that 1 Bitcoin is worth 1 Bitcoin. Well, actually, you can get a different price for different Bitcoin addresses, because virgin Bitcoin, so stuff that's been has been mined, if it's coming directly from the miner and you can prove the authenticity, they carry a price premium, because it means for companies who want to watch out about due diligence and traceability and origination of funds.
Those are go to OTC. The OTC deals then are different, but you know, there's something else. that is more valuable, which is the original ones, because what you get is all the forks after, you know. So you still go to get the ones before the first fork, yeah, and people still have those versions, you know, that the original ones, then you will be able to get all the forks from then on, you know. And that has a lot more value because you get a lot more for those. Yeah?
So all we're showing there is it all comes down to expressions, phrases, and what people decide on.
But yeah, not only that, Gary, you know, non-fungible token, non-fungible, unique, yeah. So if it is not unique and you show that this picture is unique, it's non-fungible anymore. It's not an NFT, and people are creating series, which is okay. And again, I keep repeating this. Yes,
it's not the asset that's unique. That's the thing.
Because it has a token behind it, which is a technology that is different, it doesn't make that non-fungible. It looks the same.
Imagine you have a series of these posters, let's say Beatles or whatever, and one of them was actually signed by Paul McCartney.
That's different.
Well, that's an NFT that's been held by someone, and you can track the provenance, and suddenly that NFT.
That's different. But that I agree with you. If there is a signature from someone famous, then it's different from another one that doesn't have.
But if you can track the provenance of these NFTs, they're all different. They're all unique, even though they come from a series.
When somebody creates a series of 100, yeah, like we see many out there, they look exactly the same. The only thing that differs is the number, yeah.
Until they're transacted. Once they go into the market and they're transacted,
once they sold. That's what I'm saying.
Yeah.
But I keep saying this, at the point of sale when they create it, yeah, they are securities. On the second transaction, they are sold for different prices, so they are different. But at the point
I wouldn't say they're securities. I wouldn't say collectibles.
If they are fungible,
shredding
it becomes
no. I mean, even if you go by the Howey Test, like they're not going to be securities. So
but they are fungible.
So what? Something can be fungible. It doesn't have to be a security. And it starts off life as being non-fungible in the first place.
Well, if it is fungible, yeah, usually there's an expectation of making money out of that. You cannot sell 10 of the same, they look the same, that are fungible and call it non-fungible. They are not non-fungible.
It's just not, obviously not that simple, is it? And irrespective of how you define it, other people have other definitions, and all value is subjective.
Yeah, but that I agree with you. People coming up with all their definitions, just because somebody says, yeah, I'm going to decide to call a chair an aeroplane, it doesn't mean it is right. You know, they can call whatever they want. It's a free world, you know. Come on. What I'm against is people just coming up and banking on something and start to change things to fit the way they want to make money. No, there is specific things. And look, I totally agree with what you said. It's subjective. That I agree. I'm one of the guys, because, you know, you'll understand soon, but I've been pushing a lot for people to try to understand what NFTs are, you know, and I truly believe that is going to be great for artists and great for people that want to be connected more with the artists and owners of art, because you're going to see a recycling of old people mindsets, old collectors that own Picassos or whatever, and you'll see a new generation of people that are entrepreneurs and crypto entrepreneurs, have too much crypto, and they'll buy the Picasso. So you're going to start to see all of that art suddenly start to be moving hands to a more younger generation that is going to be traded, you know, between them, basically, you know. So then it's going to be interesting to see that special club that you said, that are mainly in Switzerland, where 80% of all art in the world is in Geneva and Lugano free ports, you know, tax purposes, you know, and goes always around that small club, you know, it's going to be kind of extended globally, you know, in a different way. And this for me is exciting as well.
Well, that's where it comes back to Hughes' point that this opens up that market to a wider audience, which has got to be a good thing, definitely.
Yeah, I agree.
Yeah. Folks, I'm conscious we're nearly on the hour. I just wondered in the last minute, has anyone got anything else to add? Mike, thanks very much for joining in on some of the conversation there. I think it's been dominated somewhat tonight by a couple of topics, but it was great to get any input.
Because actually half working, half listening to you guys, so yeah.
That's often the thing. And I know as well, a lot of people actually watch the video recording of this afterwards. The number of
just a quick one. Each one of you, where do you think Bitcoin is going in the next 2 weeks? Up or down? Gut feeling, just nobody will, you know.
I've put on our group, it will hit one more all-time high in the next
I think
few
a couple
months.
of weeks. I would say probably down.
You think? Because well, I'm actually looking at the moment, and it looks fairly settled at the moment. It's gone quite.
Can you change to day by day?
Yeah.
Now zoom out. Big. More.
There was that head and shoulders pattern emerging.
Yeah,
I'm going to bucket that one and say it's going to go up.
Yeah.
No, TA doesn't work. It's all about FI.
No, it's exactly the wrong way around that. FA doesn't work, but TA does, because you use TA to predict what everyone else is thinking.
No, I don't agree. It's all about FA.
There is no FA.
It is, because what you look is at liquidity and what's on exchanges, and you're going to see how much people have borrowed on a half. It's very easy to do it. Very, very easy to do, to see where this is going. And to my opinion, this is going to go, if it goes to about 39, 38, we might see it really go down to about 34, 35. If not, it's going to around in the next 2 weeks around 44, 45 maximum.
I think looking at this down candle at the moment, someone's just been listening to you. You know, they're clearly tuning into this thing, and they're going, sell. So anyway, we'll see where it goes. Guys, going to have to close it off with that. So thank you very much, everyone, for joining in today. I hope those who watch the recording find it interesting. So do click on the like, subscribe, blah, blah, blah type thing. But yeah, who's Fernando, Mike, thank you very much for joining us. Be safe.
Thank you, guys.
Thanks, everyone. Have a wonderful evening. Cheers.
Yeah, see you now.
Bye.